What's up, Fintech fans? It's your host, Andrew Carpenter, and welcome to another episode of Fintech What the Heck? The podcast for financial professionals, everything fintech, and the future of data. Today, I will be interviewing the CEO and co-founder of RAFA AI, Abhinav Sinha, along with Intrinio's CEO and co-founder, Rachel Carpenter. And I will also be talking about trading APIs and what it means for the future of data buying. My special guest today is Abhinav Sinha. He's the CEO and co-founder of RAFA AI. RAFA AI is a fintech that provides everyday investors with bite-sized, deep AI-driven investment insights. Abhinav has over a decade of experience designing and building large-scale data-centric products, and Abhinav has previously worked as a software engineer at NVIDIA and as a founding engineer and VP of engineering at Context 360, where he worked on developing privacy-friendly AI models to generate and contextualize insights from smartphones. Abhinav has a profound interest in data visualization and the application of artificial intelligence in finance, and he's been a quantamental investor for many years. He holds a master's in computer science from the University of Southern California, and on his free time, like me, he enjoys playing tennis. Welcome to the show, Abhinav.
Hey, thanks for having me.
Yeah, my pleasure. I've been on your platform. I've been checking it out. There's a great video on there that actually shows folks how it all works. Can you just tell people a little bit about RAFA AI? What is it? What are they getting when they come in there and start using that to generate investment insights?
Sure, absolutely. So RAFA AI, our idea was to actually give you a platform which is mobile first. And when I say mobile first, it's like there are a lot of platforms out there that may not be able to serve you the best when you are on the move, on the go. And if you are a trader or an investor and you're looking for technical insights, if you're looking for technical analysis, or if you're looking for fundamental insights, then RAFA provides you all that. And the way we do it is we automate the process. We basically run the algorithms every hour and every day. And so they keep running, and then they produce all the insights. They do all the they merge insights from shorter time frame and the longer time frame, and then the models actually compress these insights and produce scores every hour. And so it may not be extremely relevant for long-term investors in the sense that they may not be timing the market every now and then every hour, but it does make a lot of yield enhancements if you were to actually go in the market and like starting a position and all. So it does save you a ton of money, basically.
Yeah. So the website's RAFA, RAFA.ai. I'm looking at it now, and I can tell it's mobile friendly. That's kind of cool. I haven't seen any other platforms doing that. Can you talk about like the brains behind the AI? Like what are the insights that you're generating? Like if I have an account and I'm using it to generate those trades throughout the day, like what's going on in the back end? Like what are you actually analyzing?
Sure. So in the back end, we have a ton of models there. So I mean, we are doing there are a couple of models that are actually just working on the price and volume. So there is a very smart feature that we call it smart dollar cost averaging. So you would have heard about dollar cost averaging all around in the investing world. It's like just adding positions every day, every month and stuff like that, right? So it's very uniform, right? And what we do instead is we actually compress the insights. We find these levels. These are the levels which have seen higher volume, which have shown in the past high amount of buyer conviction. And so the models actually detect these levels, and then they give you the map of these levels. And then what you could do is you could asymmetrically spread your bets, or you could spread your money at these levels. And we have seen in the past that it saves you a lot of money, basically, as opposed to doing basics dollar cost averaging. So that's one of
Okay,
the
I
aspects.
want that. I had that idea. I had that idea a while ago. I was like, why am I just going in once a month at the same time? It seems almost like blind on purpose. And I've been wondering for a while if there was a way to, put an algorithm on when that happens. And so is that how you think? Is it like, how can we automate these processes that an investor like myself who doesn't have this tool has to do by hand?
Absolutely. And I come from NVIDIA. I come from like, I was not a day trader, right? I was always involved in my office, and I didn't have time actually to do that. So the story of RAFA actually began by me not having enough time to actually do all these things. And I still wanted to have control over my money, right? So the way, the low hanging fruit here is that AI could be used to automate stuff, right? And you could go into deeper level insights and forecasting and other stuff. But the easiest thing you could do is automate these workflows, right? And these are very common workflows. A lot of investors use them every day. So that's basically one of the features which is really very useful, which has been found very, like, our users have loved that feature. Then there are a couple of clustering models that actually, when you enter RAFA app, when you open the app, they show you clusters or bubbles. And so instead of looking at like the price changes every day, which is like kind of boring, like you just look at this stock is up 5% or this stock is down 6%. It actually shows you deeper insights. It gives you these bubbles like, okay, this is my stock that is giving me buying opportunity. This is a stock which is actually oversold, or these are the set of stocks that have analyst updates or up or downgrades. So it kind of focuses you, it bubbles the information to you. That was the whole idea. Like, we didn't want to actually dig in and find the information, right? So yeah.
You have a big interest in visualization. It shows on the app. Like I can log in and I can see like, oh, this is a really helpful way for a human to look at this data with, sorted by market cap, making bubbles that are larger for a company by market cap. So it's not just showing me what the market's doing up and down, but I can get a sense of where we're at. Can you talk through how you think about visualization and why that's so important to the success of RAFA?
Absolutely, yeah. So that's when I started my career in data science. I mean, the thing which I was taught is like 80% of the process is all about setting up the data and getting the feel of the data, right? So EDA, or the exploratory data analysis, is such a huge portion of the data science, right? And then once you are done with the 80%, you just click and then it's like the model finally runs, right? You get the feel of the data. So we spent so much time in actually analyzing, and we so much time getting the feel and also visualizing data that became so important, right? And in the investing world, I was like it felt very odd to me that most of the folks are like, they spend a few minutes here and there looking at the chart and then they make their decisions right away, right? So it doesn't feel right to me. Like so what I thought is like the right way of doing it is presenting the information in the correct way, in the way that your eyes can, your senses can. You can sense that information correctly. You can consume it. You can digest that information. So it's super critical to have the right sort of visualization in this.
Yeah, I was taught that as well. That like you spend 80% of your time cleaning the pipes, cleaning the data, getting ready to do your analysis, and can tell that from your app that you've done all that work on the back end. It wouldn't work otherwise. But I like the idea that, you need to save some time to do the right visualizations. Once you do all that work, it's almost penny wise and pound foolish not to say, okay, let's really focus more of our time on visualizing it so folks can look at the right analysis to get the right insights.
Absolutely. Yeah. Yeah.
Okay. So I'm looking at your website right now. You've got a free plan on there. That's easy. That's an easy sell
Yeah,
for someone to go
yeah,
to Rafa
yeah.
AI and check it out. And you've got a 14-day trial. Um,
Mhm.
how are you finding? How are people finding you now? Is there word of mouth going on? Are you advertising? What's driving people to come in? And I mean, there's no barrier to trying it. It's free, so they're
Sure.
getting in there and they're liking it. It sounds like. How are you
Mhm.
finding? What types of people are you finding, and where are you finding them?
For us it's a discovery problem. So once the user discovers it, they know that it adds value to them. So it's all about spreading the word. So, and a lot of our almost 60% of the users that we have gained are word of the mouth from. We basically are active on different channels like stock tweets, and also we have some AdWords spend. And now we are actually, so far we have been just focusing on product development and getting the product in the right shape. So it was a small set of users. We just came out of beta some few months ago actually, and so now it's all about getting like expanding the scope, getting more users. And so our initial set of users really helped us refine the features. So we went back and forth, what worked, what did not work, even understanding the persona, right? We started with like absolutely the most basic form of retail investors. And then we realized that maybe not, maybe we should hit somewhat in the middle. Like maybe you should hit the users who are a little experienced in that. So that they can leverage all the tools, they can appreciate the features that are being provided to them. And from day one, our focus was providing this software for almost negligible cost. I mean, if you look at any other alternative that exists that covers the same amount of information, it's like we are like 5 times cheaper almost in terms of that. So the whole idea of the team, the whole mission we have is that get the discipline out, like which currently is a little bit of a problem, right, with investors. So have them use the tool, have them get the confidence that they could trust this AI. And by the way, we are not taking the final decision. We still are in the camp that, hey, we are gonna take you the final step, but it's you who has to take the lead.
I like that approach of targeting folks not who are just getting started. I think there's been a lot of that for like, okay, well,
Yeah.
you've never invested before. Let's teach you what to do. But I actually prefer to learn by getting my hands dirty at a higher level. And I think that your users probably can tell that these are tools that are not entry level. Like this is what you would do
Right.
if you were a little more advanced. Sure, we're making it easy, and
Hmm.
it's going to be approachable, and you can tell by the visualizations that like, oh, it's intuitive what insight you should derive here. But this is actually something you can graduate up into and become a more serious trader.
Hmm. Hmm. Yeah,
And I,
absolutely.
I think, do you think that, so you mentioned some of the tools that are out there that like your competitors, things that are out there for quants or active traders, they don't make a lot of their tools mobile first. Like I can picture some
Hmm.
guy or person running around New York and they're like on the subway and they're not in front of their Bloomberg terminal to pick
Hmm.
up what's going on. And is that,
Yeah.
can you picture that? Can you see like someone who doesn't have a mobile first tool using your tool in addition to or instead of a more traditional provider?
Yeah, yeah, and a bunch of our users actually sent us emails, sent that, hey, you know what, you are a big savior because we have a job and sometimes the right opportunity comes up and we miss it, right, all the time. And so you have this small app running on the phone, which is like a supercomputer, and it's doing all the computations. You just look at it, okay, yeah, it's like my assistant giving me a report on the desk, right, every day. And okay, I can pick the right investments based on that. So the whole idea was to actually empower users to not be tethered to their desktops, or to not be attached to that thing, and they could be on the move all the time.
Right. Yeah, I love that
Yeah.
idea. It's like how much time can you spend in front of your computer, even if you're a maniac? 12 hours a day, eight
Yeah.
hours a day. It's like you got to go to the bathroom. You are going to miss opportunities. There's no doubt about
Right.
it. For that section of the investment world that is active, they're looking for technical analysis and swing trades and things like that. They're out of luck if they're tethered to their desktop. So that use case makes a ton of sense to me. What are you building next? Like where's your dev time spent? Like what are the features that you want to be releasing in the next 6-12 months?
Sure. So we are actually the feedback we got was a lot of our users struggle with portfolios. So they are able to do one or two trades and then they just take and overexpose themselves to a few companies, I would say, businesses. And so our main focus now is to bring that portfolio optimization tools to them. So in RAFA, we are like super excited about some of the things that we are working on right now, which is to build models and to give AI recommended percentages and allocations for the portfolio. So it's like one of the things that we are bringing is the sector specific portfolio, which our AI actually does every day. And so it gives you a sense of like what the AI thinks actually, which direction it's allocating its resources in terms of US sectors, right? And it also includes cryptocurrencies as well. So, I mean, from day one, we have been very friendly with cryptocurrencies and we have like 1,000+ cryptos listed there. So that's one big item that we are doing internally, and we are also going to be exposing the fund portfolios. I personally have been very keen on looking at what the funds are doing because it's a very strong signal, and it's something which is mostly like something which most of the retail traders miss. So we are going to bring it in the form that, hey, look at this portfolio that this fund ABC is doing. It's like it's $200 million fund. You cannot ignore this signal, right? So that's a big thing that we are trying to build and bring it out to users. And not just that, once you look into the funds, you could actually fork that portfolio and then actually play around with it. Like, hey, what if I reduce the allocation for Apple? Like, what happens? Like, and so you can backtest it right in the app. So there are tools that will allow you to do that, but it's on the web, right? And so here you are gonna be directly talking to the AI, and it's giving you all sorts of recommendations in terms of portfolio. So that's a big thing that we are working on right now.
Wow, that's exciting. I don't have access to that at my brokerage where where I'm doing that type of analysis. They don't give me the ability to say what's in a fund and how's the fund performing and then back test it. It's just, buy, sell. That's about it. Maybe some news. So I love that idea. I don't know any retail traders that I know of that are able to look at that in a sophisticated way. And then you said the magic word, you said crypto. And so I got to ask you about crypto. Everybody loves to talk about crypto.
Yeah.
It's such a buzzword and it's like everywhere, but I can see it on your platform. I can see the visualizations and things. So it sounds like you're taking a little bit of a different approach to visualizing and analyzing crypto. Can you talk about how you think about crypto as an investment and how you do technical analysis and visualize crypto data?
Sure. So from day one, I mean, when we started in 2019, right, we were sure that crypto going forward, that's basically going to be the norm. So, and the biggest problem in old investors actually moving into crypto, or the investors who have not been exposed to crypto, is that it's completely different in the way you analyze things. You have SEC filings on one end, and on crypto you have GitHubs, and you have stars on GitHubs, and you have check-ins on GitHubs, right? Right, and then you have coin offerings, coin drops, you have all sorts of different metrics, and so when I talk to my friends out there, they're like, hey, what's the PE for crypto? And I was like, okay, yeah, it's a big story. How do you convert the PEs and how you compute these things? So I don't know if the platforms right now, the old school platforms that exist right now, are really equipped to do that. So this type of the whole sort of fundamental analysis on crypto is completely different. And so we started exploring it a few months back, and we were like, hey, you know what, this needs careful thought when we want to build anything on the crypto. The part which is really helpful is the community of data providers. They are pretty open, so as opposed to, and for this part, by the way, I give kudos to Intrinio, right? So the data that you guys are providing is the fuel to apps like us, right? It's not really easy. I mean, I was, when I started my journey with RAFA, it was like the first 6 months were completely consumed in finding the right data partner. And it's not just one. I mean, you have to go for like n number of different data providers and then feed the data in. And now the cost envelope where we were working, where we would serve our customers, it was super tough. It was the most challenging part we had to solve, which is like, how can we make it more entry level? How can we get more users in so that they can use the AI as well, right? So I have utmost respect for anyone who is doing the data providing part, who's actually working in the data field, because I know all the problems that happens, and I know how difficult it's like. How you drill oil, right? It's that thing which powers everything at the end. So the pipeline is, if anything on the front end of the pipeline fails, you are done basically.
Yes, I appreciate that you appreciate how hard it is.
Yeah,
It's so stressful. You know, you've got to build redundancy, and there's so much work that goes into it. But it enables what you're doing. That's the payoff, you know, is that like
absolutely.
There's some trader in New York on the subway who's looking at some quant analysis on RAFA.ai and going, oh, I'm away from my desk, but I caught this. And that's at the end of the day, it's like magical. There's a lot of work on the front end. And I think what you were mentioning, data providers for crypto being more open. I love that. I think that's really cool because there's an understanding that when an app is being launched and a company's just getting going, they can't afford the big data costs that go into like more getting data from traditional data sources. And so you can scale the costs for a company as they get bigger, as they have more customers, they can afford more data and they're willing to pay for it. But I think a lot of platforms wouldn't be built if there wasn't an affordable data source to help them get started. And that would be bad for that trader at the end of the day who doesn't get access to that tool.
Absolutely. Yeah.
Yeah. You mentioned GitHub as a source of fundamental data for crypto. I'm so glad you said that. That blew my mind. I've never thought about it, but it's totally true, right? It's like, what's the quality of this code and how many developers like it? You know, like that's actually what could drive the success of a crypto project.
And when we look at doing any sort of models, that we have a shape metrics, a feature that actually computes the shape out of the fundamentals. So again, that's our way of trying to help you not dig deeper into balance sheets and other things. On the crypto, we had to do the same thing. And so for that, our models actually take in things like, hey, how many check-ins have been in the last week? How many check-ins? Are the check-ins actually going up? How is the community feedback on crypto? So things are actually different. So you have earnings momentum on one end, right? And you have things like, hey, these guys are actually making some progress. Looks like they have very good community support. They are trending up, or some things like that, right? So there are some parallels in both domains, but they are not one-to-one.
Yes. I think you're onto something. I haven't heard that from anybody else. I think that is a great way to think about the analysis of crypto. And I don't think traders have access to that insight. That like they're not gonna. What are they gonna do? Go out and try to understand GitHub? They're an investor. Maybe they're not a developer, so they don't think that way. So I think that is going to be a very successful tool for you. All right, bringing it out of the weeds a little bit. How did you name the company? Why did you pick RAFA AI?
Yeah, so there is a funny story on that. So we from day one, I was talking to my co-founder, and we were like, hey, you know what? this is like Alexa, or this is like Siri of the investing world, where you could actually just talk to this AI and then it gives you answers, it gives you insights on that. So maybe we should get inspired by these 4-letter words, and then maybe it should be like talking like some individual, right? A humanification of this whole thing. So one thing which at that time was like, hey, it's a robo analyst. So it was stuck in our brain, like this is like a robo analyst. And so we had the words RA, right? So RA, and what can we fit? And so I was like super, and I've been always a big tennis enthusiast, and I've been like big time into tennis. So I'm like huge Nadal fan, right? And I was like, okay, hey, you know what? We got the RA here. Let's just do a FA at the end. And it made complete sense, because it's like robo analyst for all, right? It makes so much sense. And it was so easy to call Rafa, like, hey, it's easy. It's like I'm calling one of my friends. And the mindset and the defense and the things, like they have real parallels into investing. So it was pretty cool the way it was named.
That is so cool. Robo analyst for all, Rafa, and you worked in tennis, which is just so cool.
Yeah.
Well, I'm gonna end on that note, because it is so easy to remember. Robo analyst for all, Rafa.ai. Check it out. You can create a free account. There's a free plan there, and the paid plans are actually very affordable for entry level folks. So thank you, Abhinav, for being on the podcast. It was super fun.
Sure. Thank you so much. Yeah, appreciate it.
Intrinio guest today is Rachel Carpenter. She's the Chief Executive Officer, Big Cheese of Intrinio, and she happens to be my sister. Welcome back to the show, Rachel.
Hello.
Thanks for coming. I guess you kind of had to.
Yeah, you made me.
Yeah.
Here we are.
Well, it's this episode will be in season 2, so we haven't been canceled. But do you want to just give our listeners a little update on Intrinio, where we're at, what the company's working on, things that have changed in the last 6 months? I know we're always moving very quickly.
Yes. It's been a wild couple of years. COVID has been strange. We're still not really back in the office working remotely, which has its pros and cons. But things are going well. We are starting to think about some new data sets to potentially add to the platform. For those listeners who are customers of ours, you'll have noticed that we massively simplified our product offering. The way that people sell data is changing drastically. We always joke that there should be a marketplace of marketplaces. We used to have a marketplace. If I had $1 for every time I said the word marketplace, we'd be rich. But really kind of recognize in the past few years that that's not the best way to sell data to innovators. That's not how innovators like to buy data. So we've done a lot of work over the past year to really simplify our packages, our process, how people buy data from us. Everything we do is to make life easier for innovators who are building the future of finance. Open up the flows of data, make it simple, make it fast. And so probably noticed a lot of changes on our website around how people access our products. We offer kind of equities packages, options packages, and we're thinking about a few new data sets, which you may hear about coming soon. Branching into some interesting new areas. So that's most of kind of the high level stuff that's changed really over the past year, 6 months to a year. Obviously we launched our podcast, which has been a lot of fun. We've had some awesome guests on here. Andrew does a great job. We call him the Rambler. good kind of rambling though. We had the CEO of Tradier on here. We've had some really, really cool fintech companies on, and we love that, right? I mean, we work with thousands of fintech companies every day. We like to stay on top of it. And I, selfishly like to think that we have a pulse on fintech more than anybody else, because when these companies are coming to us for data, they're writing their first lines of code. They're building apps and tools and algorithms and innovative platforms for finance, and we get to see them before anybody else does, and then we get to interview them in the podcast. So it's fun. It's fun to keep a pulse on everything, because it's certainly been a wild couple of years for fintech. That's for sure.
Rambling Man is an Almond Brothers song. I wonder if we could get that for the
intro to the podcast? We should.
You're talking about like simplifying, making things easier for innovators. If you come to our website, you got this SDK, you can throw that into Python and connect to data in minutes. It's really easy, but I know that on the back end, there's all this work that goes into making it that easy. Like, can you talk about like some of the challenges that Intrinio faces? Like, what are the things that we're taking care of on the back end when it comes to getting that data, putting it in a format, documenting it, all this stuff that we have to do to make it that easy? Like, what's it like being on the back end of that? Is it hard? Is it scary? Is it fun?
Yes, and yes. I actually made a TikTok. We have a TikTok now. Intrinio made a TikTok about this recently. That we always laugh when people come to us and they say, well, but I can get this data for free from Yahoo Finance. You can look at the data on Yahoo Finance, but legally you can't pull it down and actually do anything. I like to say we sell data to people that are doing something with the data. They're building with it. If you want to look at the data, that's fine. You can go to anywhere in the internet, including Yahoo Finance, to look at the data. But if you want to actually use it, to your point, there's so much that happens behind the scenes, from just straight ETL data processing processes to data quality, which could be a podcast. I think it already has, actually, in and of its own. I think we have an episode on data quality. Yep. Entitlements, right? There's a lot of rules surrounding data, and we have a bunch of YouTube videos about this now at Intrinio, like following the exchange rules, paying the exchange fees, reporting your users, entitling the data correctly, knowing if it's an individual or a business that is using the data. Entitlement. So there's ETL, there's data quality, there's entitlement. There's distribution, which is, you can go to the SEC and grab any data you want, but it's not going to be via API. So who's building all the pipes and the plumbing and the APIs and the tools? And then you've got all of the resources, the education, the documentation, API docs, product docs, how-tos, tutorials, things like that. So we used to call this the data journey, right? And every step along the data journey is almost a business in and of itself. And I think a lot of people take that for granted. They think that data is just out there, right? But Yahoo Finance is paying a pretty penny to integrate all that data into their website for a good reason, because all of the stuff happening behind the scenes is very complex, and any business that thinks they're just going to be their own data sourcer, they got a lot of challenges in store.
Yeah, it's a whole company for sure. I was thinking about like a few weeks ago or a few months ago, a piece of hardware in a data center somewhere failed, like a little piece of a drive. Okay. That causes a whole real-time stock feed to go down, and we have alerts, we have people on call, we have pagers, we have customer success team that can explain to you, why is that real-time feed not working? What's a hardware failure, and who's fixing it? We are. Go back to sleep, like we're on it. But that's just this part of the journey. There's like getting the licensing and then setting up the SDKs and the documentation. Like, that one little physical piece of hardware is taking you off of your focus. If you are your own data provider, if you do it yourself, you have to dedicate someone to sit there. And we've got that person in our office that handled it, right?
And that's a lesson we've learned too. You and I talk about this all the time, is that we also have tried to reinvent the wheel ourselves. We tried to build our own project management system, and we tried to build our own CRM, and we were like, we're not a software company. There are companies that do this, like outsource the things that aren't your core business, right? We were young, and 5-6 years ago when we were a startup, we were coding everything we were so excited because you coded, I coded, everybody coded, and we were just building everything from scratch. And it was like, why are we spending core engineering resources on building things that already exist as products out in the world? It's like, we've learned the same lesson we try to teach our customers about. It's like, don't try to build a data business inside of a data business. The same way we're not trying to build project management software inside of our data business. It's kind of similar.
I joke about it. I say like, well, hey, I want to open up a bakery in town. The first thing I need to do is build a car so I can get my employees into the office. Like, all right, and well, how do I build a car? I'm going to go start a mine, and I'm going to dig up the steel that I need. And it's like, no, you buy a car, you rent a car, you lease a car, and then you go focus on what you're good at. And I love when customers get that. They're like, oh, wait, so I don't have to worry about this. I can actually make more money by outsourcing this. And yeah, you're right. I've got what am I using right now? Riverside, Microsoft Outlook, like I've got Excel. I'm not building that stuff from scratch.
Yeah.
Totally.
It gets down to like the root of it's a challenge for any entrepreneur because you like solving problems, like you like tackling things. And if it's like you and me from the Midwest, we're frugal, right? And we're like, if we can do it, we want to do it. And it's exciting. And that's beautiful because it's part of the entrepreneurial mentality, but you have to balance that with staying really, really focused and not getting distracted and outsourcing and delegating.
Yeah.
So it's a lesson that takes a while to
learn.
If
you're bootstrapping your company, I feel like it's really easy to get sucked into penny wise, pound foolish thinking. Super hard when you have no investment, no customers, just getting started to generate that proof of concept and get going. And to be able to outsource some of the parts of your business that aren't what you want to be good at. What's your advice for people in that situation you've been down this startup road, where in the beginning, I'm trying to remember if we even had desks, like it was like bring your own computer. So
Andrew built a desk out of cinder blocks once, actually, in the early days.
We saved money on anything.
And he made me carry every single one into the
And now I have a human resources software just to keep track of the human resources side of things. So how do you get started in that chicken and egg problem when you don't have the money as a small startup?
It's just iterative. There are things you have to do in the beginning by yourself out of sheer demand. I was a programmer, for God's sakes.
No.
It was fine. I got us from A to B, but that is not the economic theory of comparative advantage, not what I should be spending my time doing. I think that theory really is what it comes down to. So yes, I spent some time in the beginning coding because I had to in the very, very beginning. You have to just be diligent with shaving those things off. And it's been hard for me to let go of some of those things. I still like to be on the ground floor and I like to do ground floor stuff because it keeps me in touch with the soul of the company. But I feel like perhaps every couple of months, once you start to reach this point where it's should I really be doing this anymore? Is there somebody else that I can outsource this to? You have to check in with yourself on a regular cadence, put a calendar invite in your calendar to say, here are all the things I spend my time doing in a week. Which of these things can now be delegated? What is it time to shave off and pass off to somebody else? But it can be really hard to let go of that stuff, but it's super critical.
Yeah, if you cling to it, you're going to slow the business down later on. And I feel like it gives you a lot of credibility, though, to when you start out in those bootstrapping days that you did sweep the floors and write the code and talk to the customers. I still lean on that experience, and I do it enough still on a daily basis to stay grounded in it. But if I was the only salesperson, we would be still, we'd be nowhere. So I think you just need to have that awareness of what stage your company's at and grow with it and be flexible enough to change how you operate.
No, totally agree.
Cool. All right. So you have a show too. If you love this show, you're probably going to really love that show. Or if you hate this show, then you want something else. Try that because, boy, she is more well-spoken than I am. What's your other show? How do people find it?
Oh, well, first of all, plug for you, Andrew. Andrew, we are siblings, and I actually wrote a blog about this on the Forbes Finance Council about the importance of how a COO is really a secret weapon for any CEO, and Andrew actually ends up telling me what to do most of the time. But he's got a background in data analytics, master's degree in that, and IO Psych. I'm crazy. I think very big picture. I am disorganized. I am a classic entrepreneur with big ideas and partnerships, and getting into the weeds and the details of the data is not necessarily where I do my best. So, and that's the whole point of having a COO, right? So you're just as articulate as me. It's just different, and that's why the CEO COO works so well. So I had to put a plug in for that. So yeah, we have started launching a lot of YouTube videos, right? So our clients they're innovating in financial services. And oftentimes that means we are selling to fintech companies. And this is a little future plug here, we have a video coming out soon about how financial institutions are actually fintech companies. And we sell data to dozens of public companies, asset managers, hedge funds, robo-advisory platforms, brokerage firms. Like, we sell a lot into the institutional space now because they're behaving like fintechs, right? And so, but either way, whether we're targeting an early stage fintech company or a fintech project inside of a big company, we're dealing with developers, right? Like, our product is an API. And so thank goodness we all have backgrounds in that, right? So we can speak to them really well. But when it comes to the types of content and education that we want to push out to them, there's so much that you can do with our data. There's so many different ways you can pull it down. There's so many different things you can do with it. And so we've launched this new series both to do a lot of tutorials, YouTube video tutorials around what's possible with our data. How do you get started? Code examples, linking to Jupyter Notebooks and Google Colab and Snowflake and all these different ways that you can get started to help kind of bring the data alive. Kind of depends who you talk to, whether or not you think data is sexy, right? But you have to bring it alive. We all obviously do think it is, but it helps to bring it alive in those videos so people can really understand what's possible. So we have the whole tutorial side of things where it's kind of a how-to videos on what you can do with our data. For example, later today, we're going to be launching a video on how to use Python and implied volatility to predict future stock prices. You can check that out. So that's really what the video series is all about, tutorials and explaining our product set, but also education, especially around, the complex side of things that we were just talking about earlier. All of the rules and regulations and nuances that they're a headache for a person who just wants to pull in data, like exchange fees. If you break those rules, you're in serious trouble, right? And we're here to protect people from that, to explain that to them. And so it's crazy to think, like, we even heard from some of our stock exchange partners, the content we're putting out to educate people on market data and stock exchanges and how these data feeds work. Like, everyone has to explain that to their customers. It's complicated. And so taking those really complex data themes and breaking them down into easily digestible videos so that our customers can understand what they're paying for, what the rules are, just again, to make it simpler for engineers that are integrating data. That's what it's all about. So tons of videos and content coming out on the Intrinio YouTube channel. Spending a lot of time in front of the camera.
Yeah, I like writing Python to analyze stock investments, so I'm all about it. It's youtube.com/Intrinio if you want to find that. And if you're listening to this on, as a audio, boy, you can see my face for an hour a week if you want to on one. Because we post these in both places, but Rachel's on there too, and they're really helpful and cool. And I think it shows that people think about finance and investing differently now, like being able to pull data down via an API, analyze it, manipulate it, predict something with it, slap some ML on it, make a visualization and sell that as an app and then get in front of customers. That's just how it's done now. That's the expectation. So like, we've been part of that transition. Like, we launched an API. Oh my gosh, an API for data. That's crazy. And then, making it easier and SDKs, and all of a sudden, a lot of people can access this data and then do cool things with it. What's going to come next? I mean, like, I see APIs everywhere now, like this is like, you can think about like Plaid and Stripe, and then now there's brokerage APIs. It's crazy what you can do just from a computer with your little bit of software. You can get licensed and not be violating anything to go build a company. So where's this headed? Like, is it leading to the benefits that you thought you would see for retail traders and having more choice in apps? Is it heading that way? And what's next?
It's a really great question. I mean, what you're talking about basically is kind of like what is required to unlock the floodgates for innovation. And obviously I'm going to say data, right? Because that's what we do. And we see it day in and day out that if you don't have the data, you can't do anything. And so that's important. But what's interesting is that that's not enough. Right? Like, you kind of have to simultaneously have innovations across multiple different planes coalescing at the same time to make all of this possible for the average investor, the average app developer, the average fintech founder, right? Like, you have to see technologies, which we are, like machine learning and natural language processing and AI, whole podcast to talk about why I don't think that exists yet. But that's open source now, right? Like, those tools are available to anybody. Like, if you aren't incorporating machine learning into your models, like, it's all out there, right? And so technologies like that have to be up to speed. Big institutions need to be moving to the cloud, for God's sake, right? Like, they're all working on it, but like, and they're all doing it, but like, they're not all fully on the cloud yet, for God's sake, right? Like, so like, cloud technologies Machine learning and AI, data, like all of these things have to be made easy and accessible all at the same time. And so we're tackling the data piece, right? Like we're checking that box. And thankfully in the academic community, they're checking like the ML and the AI box. And Amazon and Snowflake are doing a really good job in terms of the cloud box and kind of, and to answer your one part of that question also, APIs are really powerful. And I think that will always, they will for a time being be a huge part of the toolkit. But it's really exciting to see what Snowflake is doing, because I think for a certain type of user, that's really the next step in terms of super low latency, quick, fast, easy access to data. It's better than an API for a specific use case. So kind of two answers to the question there.
Yeah. All right. I love it. I remember being on this journey for a long time. And at the beginning, the frustration of not having these tools, and so we're making the tools, here they are. And other companies in different spaces are making the tools as well. And I think you can feel the shift. And I notice it in terms of like the apps that I use and the apps that are marketed to me to, hey, buy these bonds. Wow, like they have chat. I can sign up in this cool interface, and like I connected my bank account through Plaid. And by the way, I can trade stocks on my bank account through an API. Like, what world are we living in? It's the world we wanted to create, and I think the next iteration is in the Snowflakes, and Amazon trying to do that too. It makes a lot of sense.
Yeah, one area of that to just force us into an interesting tangent, because we've been trying to put together a panel podcast to talk about this concept, and it surrounds a lot of things you just mentioned, which is where blockchain fits into all of this, especially with stock exchanges. And so Andrew and I were trying to put together a panel of industry experts in the areas that we think will be affected deeply by trading starting to happen on the blockchain, right? So like Chainlink is a huge partner of ours, customer. They're putting our market data on the blockchain. What's really happening there, right? Caveat, there's a lot of regulation in flux around all of this, but if people find it easier and faster to cut around a bunch of stuff and just trade securities on a blockchain, that means the blockchain is now serving the function of the exchange, the brokerage, the clearinghouse, and the custodian bank, all in one, because it's decentralized and immutable and safe, and there's a record of it, and you've exchanged on the blockchain. All of those functions, in theory, right, are all being done off on chain, not on the exchanges. And so there's one big question there, right? And I don't know the answer to that. That's why we were trying to assemble a panel of experts to talk about it. And they're also scared of it that nobody would come on the panel. All these big institutions were like, we're not ready to talk about this publicly yet, which is fair because this is in flux, especially when it comes to regulation. But it's interesting to think about that. We're probably 10 years away from that. The second piece of that, which naturally falls from it, is where do we get our data from? A lot of our data from right now.
Stock exchanges.
The stock exchanges, right? And so, and why is that possible? Because all of the transactions and the volume of trading is happening on the stock exchanges. So where does the source of data become if most trading is happening on chain?
The blockchain.
The blockchain. And here's what I'm concerned about. The blockchain is a really inefficient way to get and receive data. The latency is going to be terrible. It's an inefficient database,
right,
in theory, right? And so that's a bunch of questions wrapped in one, but it's something I think about a lot, right? Because we have to think 12, 24 months out because we run a business, own a business, but I'm also thinking 5, 10 years out. What is this going to look like? And I don't know.
Yeah, I think they could be one of two things. Either it's an industry that's ripe for disruption. There's a lot of inefficiencies and challenges with getting the market data, with trading, and there's big problems. And so there's some fear in traditional exchanges and they don't want to talk about it. That could be it. Or we're just embarrassing and nobody wanted to be on our panel.
It could be both, honestly. Yeah. Well, I mean, most of the companies we're talking about, the big data vendors, the big stock exchanges, they're hedging, right? They're investing in blockchain companies heavily. And some of them are even starting to use blockchain in their exchange infrastructure. Yeah. So they're not doing anything about it, but I still have questions.
I have a lot of questions. I've talked to multiple exchanges that are interested in the Oracle, being an Oracle, providing outside data into the transaction and getting their information in there more seamlessly so you can trade. So like, I think some of the stock exchanges are embracing it, literally to the point of investing in crypto companies, and the crypto companies are investing in stock exchanges now. That just happened with IEX. So it's like, I think they see it coming. It's a real possibility. Whether challenges can be solved remains to be seen, but I think it would be fun to have the panel and talk about it.
We're still going to work on it.
Yeah.
Because we can speculate all we want, but we don't work at brokerage companies or clearinghouses. So I think getting the right people at the table is important. Another crazy thing to think about too is we spend so much time thinking about the traditional stock exchanges, but there are crypto exchanges that have really powerful infrastructure that's already on the blockchain. Mm-hmm. You look at FTX, you look at Coinbase, Crypto.com, Binance, some of these other platforms. What if they started to branch into equities as well, right? Yeah. So that could be a different direction that things head into.
I think a lot of those platforms, they were API first. So like you can get crypto data over API a lot more easily and a lot faster than the traditional exchanges started making that possible. A lot of the exchanges are now having cloud API offerings that can access their data. NASDAQ has that, IEX, others do as well. And I think that's coming into the traditional exchanges, but the crypto exchanges, they're like, here you go, here's your API, get your data. Like they think like developers, because that's what crypto is. And if they were to move in that direction of being more traditional stock exchanges, I think that would be good for consumers. They'd have better access to that data.
That's a really great point. The crypto mentality, right, is like open access, democratization, tech forward, tech heavy, which is arguably what we're trying to do with data. It fits the mold, right? It could be an interesting angle.
While we're down rabbit holes, do you want to talk about commenting on SEC filings, just to get some information out there about like that you can do that and that this happens? Yeah,
I think that's really important. So anybody who buys stocks at all is subject to all of the regulation and rules around stock exchanges, because that is going to be the source of the market intelligence, the data that you use to make your decisions on which stocks to buy or sell. So if you own a stock, like we're talking about a huge population of people who are impacted by all of the rules and regulations that surround stock exchanges. The SEC is in charge of regulating those stock exchanges, and they frequently put out recommendations, they approve new filings by the stock exchanges, and there are a lot of stock exchanges that file to include exchange fees and different types of fees surrounding the data. It's an interesting philosophical argument, right? Because arguably pricing data from the exchanges is necessary for anybody who wants to invest. And so is that a right? Is that a right for every investor to be able to access that data in some fashion? And that's the game that the SEC has to play with these stock exchanges, right? Is that they need to make money too, to be fair, right? They're allowed to charge fees. It's costing them money to run the exchange and create the data. So by all means, they should be able to charge for it at different levels. I think the problem that arises is that right now, there aren't any good options for people that can't afford $10,000 a month to pay those exchange fees, right? And so we don't have enough exchanges that are playing nicely with the everyday investor and not charging a lot of fees. Technically, these stock exchanges can charge anything they want at any point in time. They can file to start charging for new fees and instantly charge. So let's say that an imaginary stock exchange wanted to charge $1 million for access to their data. They could do it. And the SEC has up to 60 days to counteract it and deny it. But they can start charging right away. And if they get denied, no, you're not allowed to charge $1 million for this data, they can refile on that same exact day. So in theory, there's no point in time at all, ever, where a stock exchange can't charge exactly what they want to charge. So the SEC it's a tough position, right? There's a lot of regulation. You're looking at the Dodd-Frank Act. You're looking at, the political environment. There's a lot going on here, and it's really complicated. But this is all to say that it affects you. It affects everyone. Everyone who buys stock is affected by this. And so the SEC is hungry for people to comment on it. And anybody can openly send in a comment letter to the SEC, which most people probably don't know. So if you're looking for more affordable access to data and you wish that this was more transparent and democratized and there were products out there in the middle for people who didn't want to pay a ton of money for access to this. You comment on it. You can send in letters to the SEC. It's actually really easy to do so. So it's a little controversial, but the theory in the end is that we really need to have a suite of available market data products. They can charge money for the expensive stuff, that's fine, but there has to be options. And there's a lot of regulation out there right now surrounding this. It's a pretty hot topic that I think not a lot of people know about.
Yeah.
It's complicated.
It's a place that would be ripe for journalists to look at, because I think if you, the website, unfortunately, is sec.gov/rules/proposed.shtml. So you can Google it. It's findable. But if you go in there, you've got 30 years of history of filing, rule change. And we know, because we deal with the exchanges and the apps that consumers use, the Robinhoods and Betterments of the world, like, they're affected by this and how they charge and how they invest, and all this matters. But if you go to this website and you want to digest what's happening there, it's impossible to understand the language and everything. And then nobody comments. I've looked through and I've seen filing, maybe one comment, maybe no comments on filing after filing. And I think if people knew about that, there'd be a lot more people researching it and journalists looking into it, and then individuals commenting, and the SEC could take that under advisement when they make their rules. But as it stands, they're just rubber stamping things, or they think about it and maybe they push back on some things. I have seen things get denied, but in general, the public isn't getting a say just because of a lack of knowledge.
Yeah. Well, and the irony too, it's a great point. I mean, the irony too is that the SEC is out to protect the everyday investor also, right?
Yeah.
They regulate and help Wall Street, but they're also really trying to help Main Street. The problem is they need to hear from Main Street. If they're trying to protect them and make sure that they're making decisions in and around these rules and regulations to protect the everyday investor, they're flying blind unless people actually tell them what they need. I need cheaper market data. I don't want to pay exchange fees. This isn't fair. Like, whatever it is, everyone's free to comment. And I would love to see that more, because think about the rise of the retail investor. Think about what's happened with GameStop and the pandemic over the past 2 years. These people have a voice now, and it's not even just the retail investors. It's anybody who needs this data. It's professional investors. It's regular, institutions and firms that have to pay for this data, app developers, fintech companies. Stock market data goes everywhere and impacts everything. Yeah,
the SEC's got an interesting job. They have to protect consumers. That's why all this regulation exists. But and they also don't want to be perceived as anti-free market, anti-capitalism. So if you read these filings, a lot of it is like, hey, there's 12 stock exchanges, we're in a competitive place in their businesses. So the prices should be fair for market data because there's competition between the exchanges. But, in the real market, they're acting oligopolistically. They kind of all know, hey, we can charge a high price point, even though there's 12 of us. And, the fees end up sinking a lot of apps that never get launched. And I think it's illustrative if you trade options, a lot of times you have a fee to trade options. Like, we're all used to trading on Robinhood for free now. But if you want to trade options, there's a small fee attached to that. Why is that fee there? It's there because if you want to get options data, it's very expensive to run that as a business, and you end up paying per user fees to service that app inside of Robinhood. They're paying every time you transact. They have to have a per user fee, and they have a big monthly fee they got to make back. And so they end up passing that fee along to the consumers. Well, if the fees were lower to get that data, then consumers wouldn't be paying so much to trade options contracts. That's as simple as I can make it. But how many of our listeners, and myself included, have gone to sec.gov/rules/proposed.shtml and, commented on what's the top one today? Rules relating to security-based swap execution and registration and regulation of security-based swap execution facilities.
I don't think most people spend their free time the way we do. Something tells me.
All right. Well, tell me something fun. We've dove into the rabbit hole of SEC rules and the future of stock trading. We want business owners and managers, decision makers to listen to this show. What's your advice to them? What have you been doing differently as a manager and executive of a technology company? What can they start doing differently? I bought a new coffee maker. It's really made a huge difference for me. How's your thinking evolved as a leader and as an executive? Like, what are some tips that you've picked up recently?
I would say there's probably two things I'll touch on here. The first is listening, which is something you and I ironically talk about. We talk about listening all the time. And actually, I rarely like to talk about being a female in leadership for a whole host of reasons. I just want to be treated as a regular business owner. But the reason why a lot of the research actually shows that women are better leaders is because traditional feminine traits, like listening instead of talking at the table, actually are exhibitive of that's better leadership, right? Like, I've hired really smart people for a reason. And I can be so passionate sometimes, as I think a lot of founders are, that you have opinions and you want to talk about them all the time. But like listening, people, and then Jordan Peterson wrote about this recently. He's one of my favorite people to watch. Most people, when they're talking to somebody, they're thinking about the next thing they're going to say instead of listening to what the other person is saying. You're not engaging in a conversation if you do that. You're just regurgitating a script inside your own head. And it's a much tougher discipline to actually think about it every day that you're talking to somebody. Are you really listening to what they're saying and then responding to it? Or do you already have a narrative in your head about what you're going to reply with? Right. And you'll notice how productive your conversations are. And so Jordan Peterson inspired me a little bit with that, like thinking through some of how I can be a better leader and listen more, I think is profound. The other advice I have is, and I think this is due to the COVID pandemic, we used to ride hard, right? Like you and I would be on chat support back when we were a startup back in the day. Like we'd be on chat support at 3:00 in the morning. I'd be writing blogs, working on the plane, doing this, running around. And it's fun sometimes. And I believe that your life happens in cycles and it's okay to be crazy busy like that as long as you come back down. And I wrote another blog about that on Forbes, the theory of cycles. But I'm better and you're better. You're better when you go mountain biking, right? Like I'm better if I lift in the mornings. Like I'm better if I get outside or if we go rock climbing together on vacation, like family vacation, right? Like that kind of stuff is important. Taking breaks. We've been forced vacations at Intrinio and PTO days and sick days. I do believe the hype around the post-COVID trend of you don't have to work yourself to death. Like we all perform better and we do better for our customers and better for our business when we're not working 18 hours a day. Like it's just ridiculous. There may be something, if there's any Intrinio employees listening, I'm not making promises, but there may be something to that whole 4-day work week, right? Like, I don't know. There's some interesting research coming out around it. So do a better job of actually listening to the person that you're talking to and take breaks, I guess. That's been my recent.
I love it. In psychology, there's something we talk about called the big 5 personality traits. And my favorite one is conscientiousness. It's super predictive of work performance. It's not as predictive as intelligence, but your people who are conscientious tend to do a better job at work. And that's good listeners are very conscientious. You're part of a team. And I completely agree. I don't think you can build a good business if you're relying on the burnout and crazy hours. And that's not a healthy company. It's not actually sustainable or good. You're not going to retain organizational knowledge because your people are going to leave. You can't actually build up a competitive business if people don't realize it's okay to go to the doctor in the afternoon. And if your family had a baby, you can take a few weeks off. I mean, come on, this is normal. This is a healthy company. If your people aren't so burned out, they can't come to work and be creative.
Great.
Love it. Okay. Well, I think we could go for another hour, but I'll just have to have you back in our next season. Thanks for being here. Yeah, it's great having you on the show, Rach.